righty. All right, we got through it. We got through the disgustingness of this stupid chop for the last 6 months. This is what I would call a bottom. I am super confident that this is a bottom for so many reasons. I'm going to try to go through as many as I can. For some reason, I literally have a million things to say, and I end up saying like half of them. I forget some, and then the video ends up to be like 30 minutes long. I don't know how that happens. I literally just spit fire as fast as I can. Things just, it goes so fast. I don't know how to make the videos smaller with all the information that I say. But we're going to try to say as much as we can and try to get through this. I honestly, there's so much to look at. I can't get through everything, look at everything that's going on. But the S&P, okay, so this happened today. There's a gap here. We missed the gap. I also have an alarm at 397. We missed it, okay? But we did hit these, and I remember making the video back here talking about the VIX was extremely, there was a VIX swell here where, we talked about it somewhere here, where the VIX goes up when the market goes up, and there's a very, very specific, the way it moves, not always, but the way this moved specifically was that it's going to revisit this price to this price in this area again. Lo and behold, we got it. I thought that we would have rallied first to hit the 480 to 520 area first and then flash crash to here, but instead it did this. And so the targets that I have here is that we're going to rally through all-time highs. Okay, so this is how it goes. We either rally through all-time highs into around August, and then we flash crash below this and hit all these targets. Everyone's calling for like 380. There was a glitch trade at 364 we talked about that happened right there on January 25th. That's a target. I don't know if it gets there. I think this will be the recession price back 2023. I don't know as of right now, but it's going to flash crash, and I believe it'll flash crash somewhere between like 380 and this price here. It should break this low from above 500. You're going to get at least a 20% flash crash in like 2-week period. So it's going to be very volatile, very violent. That's one way. And then we'll go back up through all-time highs going into 2023 before the recession. Or we bottom here and we just rally into 2023 being extremely choppy, just like this nonsense the entire year. I don't think that happens. I hope that doesn't happen, but it's possible that it happens. It's one of the probabilities of the waves. Okay, so here you can see that we broke this downtrend here, broke out, came back, just about retested it, and it's possibly that we're finding the bottom here. Let's go through all the reasons why we think this is the bottom. Okay. Oh my god, there's so many. Oh my. This is why I don't make videos. It's just, it ends up being 50 minutes. Okay. Okay. Oh man, my brain is on. Okay, this is where we thought that from up here, when this did this little reversal here, this violent rejection here on April 5th, we thought our prospects of where the market would go would be gapping down or flash crashing into this green line. And here it did exactly that. We made a video right here this morning saying that's exactly what we wanted, but we didn't get it, but we still could get it. And then it happened. And I thought that this was a good possibility, but there was still a probability that we had a very violent drop the last 2 weeks of April, because when the CPI number came out, if this was the bottom or the near the bottom, this should not have happened. This move should not have happened. And it did, and the fact that it broke the low after popping up like this, part of the wave structure was that this should not have dropped. The fact that it did drop means more volatility. And this just, it had this, the parameters for a bottom, but then as soon as this crack happens, it's showing you the probability that the violent drop coming is in, because this shouldn't, if this was the bottom, this should not have happened. This, even the first one, this should not have happened if this was the bottom. The fact that this started, it's like, okay, we're gonna get cracked. We got cracked literally to the T. Like, not only did we say that it's gonna do it, but we did it exactly like that, which shows you that it was a bullish bias drop. I know people don't want to believe it or think it or whatever. Like, it doesn't matter. You can even see the bullishness in the drop. You see how tight it is? You see how tight it is? And then you get these high volume, very strong spikes. It's very, very tight and very coiled. This is not like a flush move. If this is getting rejected by the 200-day, where people started talking about this 200-day was right here, it got really hard rejected by it. That's not what you would see on the drop. You would see a much different move. You'd see like really fat red candles, very bleeding type of movement, but we got this very coiled, kind of like a fishing casting the line type of move. That's what happens towards a blow off bottom where the market stabilizes down and is maintaining the momentum. A trigger happened April 14th, the close, and April 18th. And it tried going high. And this is the reversal from December 31st when the algo got triggered. This triggered the correction, and then this reversed the trigger. It tried going higher and couldn't. And the response that you would get from it is exactly this, which is one of the probabilities. So you get that violent drop. And then it needed to work off the residual of this drop. And that's what happened last week. And all we got last week was chop fest. Trying to go higher, trying to click, and just couldn't. Insane. It was ugly and insane. A couple of things were happening that looked really good. We got this extra oomph, broke the low, blah, blah, blah. Retested this. We didn't even fill the gap, which I don't know if this is the exact bottom, but I'm expecting the Fed to be the bottom. I expect Wednesday, wherever it closes, I expect it to rip up after the Wednesday close. One of the reasons why is we look at Nikkei, and the Nikkei is about to MACD cross after having a massive downtrend. Massive downtrend. You're talking February 2021. Almost a year and a half, a year and a quarter. You can see the lockstep, down, right, down, right, down, right. And it looks like it finally blew off to the downside. Retested COVID top, came back up, retested, rejected. And now it looks like it's ready to set up for a move right here, going into our Fed day. Okay, that looks really, really clean. Was coming out as well. So you have a fat DAX candle right here. And we expect this to rally out. Our market. DAX, this is one of the reasons. Hang Seng. So I explained how the Chinese markets will set up for moves the week before they go on vacation. So when they go on vacation for their New Year's and other things like that, this is their Labor Day. They're off Monday to Wednesday, and they come back our Thursday. And they set this up last week. Massive blow off bottom through its all-time low on this product. Hang Seng ETF, all-time low on a huge gap down, and you get this wicked island type of reversal. This wicked island type of reversal. If that was a bottom where it triggered off this blow-off bottom, you would see exactly what we're seeing: a wave 1, a wave 2, and then a violent activation into a wave 3. What are we seeing? Exactly that. Blow-off bottom, non-trending ADX, the residual, and the failure. That's exactly what we got. This looks really, really bullish. If this activates here this Thursday, when we open, we're expecting this. This opens, we're expecting a follow through. This is going to rip through into the zero line. I'm expecting, and so that's that. And then we had the DAX, and this is important. The DAX had a gap fill that we got, exploded off, retested all of its supply, failed. It also got an algo trigger March 10th to the bullishness side. And you can see how it went from here, broke the MACD print here, retested that. It's consolidating in a bullish manner. This is what this is, consolidating in a bullish manner. Consolidating like it has this kind of coil effect, and it goes like up here, there, like this U effect. And when it finally bottoms, it needs to bottom out right here to the gap. One of the very important things that people might not notice, and this is very important, like you'll see this close on high volume right here. That's very bullish, a high volume move right off of a gap. It's very important that at the close, at the open of today, the Swedish considered NASDAQ index had a massive flash crash that was attributed to like a technical glitch due to one trader. and the European markets were affected by it. It went flash crash down and came right back up. It's like, why would it do that? I always talk about this. These are real life events, technical things that happen in the stock market that people cannot explain exactly why. It ends up becoming just a question mark. Like literally professionals, they don't know exactly why it happened. And it ends up happening at exact moments in the stock market where there's extreme volatility, whether it's the release of volatility or the compression of volatility. The case of like VXX, where you had this massive thing we talked about our last in one of our videos, this thing that blew off, and people don't understand why people literally threw away hundreds of millions of dollars getting a redemption instead of just selling at market and taking it. And it's the same exact thing where there's a massive compression of momentum going on right here, and I'll show you. You have this is what happened today in the Swedish market. It went from 2031 down to 1900 in 5 minutes and came right back up again. And it happened right before the 4 a.m. print, which is always what happens. I always talk about 3:15 a.m. You have the VIX open up, and 4 a.m. is when all the ETFs trading starts opening up. So you always have volatility around those times. Usually it reverses its direction if there's a very specific direction going into that time frame at 4 a.m. and this happened exactly at that time frame. So that's a very significant event that's happening. And why did it happen? Why did this flash crash? And they ended up having a reason. So the Citibank Bank China caused brief European share plunge. Right, sudden fall in European shares driven by a brief crash in Nordic markets was caused by a single sell order by Citigroup. Thinly traded. The reason for the drop was a sell event by a market participant. Flash crash due to an erroneous trade on a day of light activity. NASDAQ was quick to rule out an error in its systems. They ended up concluding that it wasn't an error. We currently see nothing to indicate errors in NASDAQ's own system. So why would that glitch? That is a very, very significant and specific event. Why does it happen? Because it's literally compressing the momentum of the correction that it's had for the last year into a very, very specific moment, a click. There has to be a click of all that energy. And that's something that you would see. And so you end up getting these flash crashes that no one can explain. It's an erroneous trade that, let's see, investigating the unexplained plunge. Everybody crashed. Denmark, Norway, Sweden, they all crashed and got hit because they're all affected by the same algo of the stock market. It was weird in those minutes there. It appeared erroneous trade or a technical glitch because there was no news that could have triggered the move. Because it doesn't need a news, it's a technical move. It's the natural movement of the stock markets themselves. A brief market panic, and it's caused by an algorithm-based trades going haywire or a big fat finger trade. These are the things that literally experts cannot explain, and I can explain. I'm literally telling you this is what it is, and it's either pricing in a future move, but in this case, it's more so the compression of the momentum of literal 6 months to 18 months of a downtrend in world markets, specifically the European markets, compressing, expecting for it to click 2 days before the Fed meeting. 2 days before, in my opinion, is we're about to rally big, and we'll explain why with everything that we're seeing. So like, it's amazing how everything happens exactly when it needs to happen, and you end up getting something like this. Something amazing just like this. Yeah. So that's that. And then we'll talk about the FANG and everything. So that's that. It compressed. Then you have the Nikkei, the Hang Seng. So one of the things that you have to look for is our target for UVXY was the 50 weekly. The last time the 50 weekly got touched was right here in August. And then we missed it here. And what I've been saying this whole time is that the rally that's coming should be a fractal of the of 2020. It should be continuation wave of the vaccine move from November. And lo and behold, this is when it hit right here, and the vaccine move almost touches it here. But this hits it in September, when we had that little drop in September, and then we're bouncing off of it here. So in terms of momentum, it looks very, very, very similar and basically perfect. This hit it, this should have hit it, this missed it, this apparently missed it. But at the rate it was going, I was expecting it to hit it, 20.4. I think it still could hit it on some real disgusting overextension on Tuesday or Wednesday. If the market wants to drop Tuesday or Wednesday, whatever. It's a viable dip. Not worried about it at this point. Hit the 200, got rejected here, retested it here, got rejected. You ended up getting the algo trigger April 25th here, and it triggered it to the downside. And then the way this moved is moving in a bearish bullish pattern. This is not the way UVXY moves when it's in an uptrend. So this is where the market triggered to the upside. And then the way UVXY moves in a bullish, true bullish trend, meaning the market's in a downtrend, this is not it, my friends. This is not it. This is not the way it moves. It's not the way it moves. The only way that it would move like this, which is why it was frightening in some sense, the only way it would move specifically like this, which with all these like drops and stuff like that, is if this is going to go to like 50 to 80. This would be a very, 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 very ugly looking start of it, where the impulse wave hasn't even happened yet. Then you get this move, you get the impulse wave, and then you get the residual, and you get a move that goes somewhere between like 50 and 80. And I just didn't see that in the market. I just don't see it in the market right now. I want to see one more final rally in the market. That's that. The monthly, the violent drop, the violent spike on April 25th was bouncing off of this, and then we ended up breaking this, so we need to see it break back through it. What I've been saying for months is that the VIX needed to break out before it could actually fail, which is very, very difficult for people to end up trading it, because if the VIX breaks out or the market breaks down, how do you tell people it's bullish? You can't. You literally can't, which is a very, very difficult thing to talk about and explain, that the VIX ends up needing to break the momentum of the uptrend, right? This goes down when the market goes up. It needs to break it with all its energy. That's the thesis. Break it with all of its energy, and then it needs a rest, which would be the last final rally. That's what I've seen. That's what I see because of the sentiment, how bearish it is. People have been the bearish it's been since 2008, and we actually broke lower in sentiment than the bottom of COVID over here. Hello? 15% drop, and we're lower than COVID. People are shitting themselves. Yeah, don't mess with the tornado, guys. We said if it doesn't clear here by here, we're going to get annihilated. So we have to rally out. The sentiment is completely washed out in a setup where the market is going to rally huge. And that's the type of setup you want to see. You will never get a setup where people are literally calling the moves before the moves happen. People are literally calling for this to rally because it's so bearish, it's oversold. It's going to top here, and then it's going to continue the bear market drop. They literally called it before it even happened. And now they're going to say, yeah, we could rally a little bit. We're oversold. We're going to rally a little before we head lower again. And people are so confident in the drop that they keep talking about it, and they really think that it's a bear market, and it's not. It's literally going to reverse. This is how UVXY reverses. This is the pattern in which it reverses. One more final rally. You see it here. This is what I expect. That's what I expect. If it moves in the way that it moved in 2020 off of wave 1, and if this is wave 5, it would last the same distance of wave 1, which lasted 2.5 months or 5 months. I don't know which, but I will know as the market progresses which. But I see 2.5 months to 5 months. I think it's 2.5 months, so we'll top somewhere in the middle of July, give or take. And 2.5 months to 5 months. Yeah, that's that. But it needs to do something like this, a really violent drop. We also talked about UVIX, how UVIX appeared at March 30th. Literally at the peak of this move, UVIX and SVIX, two new ETFs for the volatility, appears right here. Now, what if we actually rallied through? We went through all-time highs. We went to SPY 500, right? We chopped it. We went SPY 500. UVIX appeared at 15. If the market went straight up and the VIX went down to like 15, this literally would have went down to like below 5. So you're going to open up this ETF and then it's going to drop all the way down to 5 within like a month, and you're going to have to reverse split within like a month. It'd be like awkward. It'd just be really weird that it would do that. And so, like I've said about this, is that they opened up at the exact moment that they should open up. And I do believe that they're both going to open up at an exact inflection point overall in the market, that this 420 to 460 to 480 range, basically this block, will be a very, very large point of momentum going forward for the next 2 years, 3 years. You're going to see this area a lot, both to the upside and both to the downside. Another one. Sorry. Good. Another thing that we see is when this bottomed here, we were expecting a massive rally. We got it. The way this bottomed is, in my opinion, the same way this bottomed. That, and we had an engulfing. I think we do the same thing. I actually think we close above the open price here at 450, possibly even going above this on the closing. Reason why I think that is the monthly. So this is when the VIX ETFs got triggered, which was in May, right here, and this is where the MACD topped, right? So it tops here, goes sideways, and then starts going down. And so it doesn't look like the VIX got triggered here, but it did, and it takes so much time to slow it down. The natural process of wave cycles is anyway. So you can see here on the DMI, if you just look at the DMIs themselves, see how it breaks out here, and then now it's touching. This is exactly what we wanted to see. You notice how the yellow DMI, which is the negative DMI, didn't even move up this month. We had the worst month since 2008. It went down. It went from 16.3 to 15.5. What? What? Hello? It doesn't make sense, right? There's a reason why it doesn't fucking make sense. Because it's not actually a down move. It is literally a residual move. It's a residual move off of this blow-off move. It's not actually a down move. It's you throw a ball down a flight of stairs, and all the movement that happens down the flight of stairs, it's not actually a down move. It's like a reaction off of a bounce or off of your throw type of thing, which is a huge tell that that's exactly what it is. Because if that was the worst month ever, you should be getting a spike like this. It should be spiking out something, just not down, just not freaking down. And we talked about this here. As this went down, DMI went down. As this went up in October, DMI went down. As the November closed lower, this went up. And so it's ended up doing these really coiled moves where as this explodes higher, it opened very violently down. So you end up getting a down print in the DMI. And because the violent move in November was down, it started strong early, but then there was a really violent move down at the end of the month, you end up getting a, so you get the positive move here going into November, you had a strong move, but then the bigger move was to the downside at the end of the month. Why would it go up then? And then again, in December, you had a huge rally at the end of the month, but it goes down. That is a huge coil of a reactive moves, is that the market isn't actually up here. The momentum is down here because of this blow-off move from Evergrande. It's not even actually up here. And what it does is it violently pushes it down, and it reactively just bounces up. This is fluff. This is like you're just throwing a tennis ball at the ground. And this is the reactive move up. And it allows it to catch the momentum here. That's what it did. It caught the momentum. If it's catching the momentum, what is this? It's still not reacting with it. It's still not moving the way it should. This went up in March. This went down. This got crushed. They both went down. You understand? It's not real movement. It's just residual momentum. Just the ball rolling. So what's the real move? Well, then you look at fundamentals, technicals, and psychology. Psychology, people are scared to death, right? So you have a contrarian indicator there that you're falling into support. This is massive monthly support. It hit the monthly middle Bollinger for the first time since the COVID bottom. That is massive support. Okay, and when it hit it intraday, it hit it right here. See the gap up? It touched it the last print of the day. So as soon as it touched it, it gapped up and reacted violently with it. This day, it engulfed every drop. Every drop that next day, it engulfed to the upside, which we noticed. Every time it dropped, higher move, dropped, higher move. The entire day on a 5-minute scale throughout the day. Every time it dropped, it engulfed it to the upside, right? It dropped, engulfed until like towards the very end. And it's showing you the strength of the market doing it. And then what ended up happening was the market ended up selling off into the gap. This is our target. We had an alarm here. This was the gap from here. Futures always get filled 99.9% of the time. So we're expecting for it to get filled still. And what did we get? We got this fishing line, insane coil. This is disgusting. This is not what you would see in a downtrend. Something really coiled is going. And it crashes right into it at the end of the day. Literally the last prints of the day, and the VIX as well went right into the gap on Friday into this. And what did it do at the end of the day? It went down. You're flash crashing, going straight up into the close of the day. UVXY was set to explode on Monday, and its first print was down. The first print was down. That should not have happened. The way this is set up, one of the waves of the probability, this should have exploded. It did not. Score 1 for the bulls right off the bat, off Monday morning. So this filled the gap, and you're expecting some residual moves sometime this week. Fill this gap, right? So if this fills the gap, you get the kickback. Then it fills this gap up here. Get kickback. This possibly could have been the bottom, because I was expecting the market to rally into the Fed, and then the Fed sells off, does this, and then fails. What we did over here. Exactly what we did. It's rare to get the same exact event to happen again, which is better because it would have been less likely for it to do exactly that again. So great. So it's doing this. Right now those futures are up 0.5%. Okay, so if this is what it's doing and it's not a real move, what is the real move? Well, you're having a negative DMI come up. We had this one drop, and this is coming up already. Finally, this is coming up. Now this is coming up, and we're green, but we didn't go up on that. Like, hello? So this is considered one wave cycle, up, down. You're going to get a residual move, should get a residual move to the upside of this positive wave, which should be extremely violent. 2.5 months to 5 months. That's what we're expecting to see. And so this tries to cross and fails. Tries to cross and fails, which we're seeing on all the indexes, the European indexes, China index, the Nikkei, everything is failing. And look at that candle. This is the type of thing you wanted to see around UVXY's 20.4 target. UVXY only got to about 19.8 today. We missed it by about 60 cents. Close enough. Really would have loved to see it fill the gaps as well at 400 or 397. There's also this. People don't realize. Some people have the chart, the thing drawn. You have this trend. This overextended. This one overextends through and fails. And then this one is the cleaner one. So eventually I think this gets hit as well. We have the cleaner one, and we went right into it. 2008. Right into it. Like you can't make it up. Like really, really clean. Which is also another reason why I think we're going into another megaphone pattern, because we broke this megaphone pattern and we're bouncing off of the previous megaphone pattern. And I think we're about to set up another much, much larger. Also, the biggest reason why I think we're one of the, if not the biggest reason why I think we're rallying is it crashes into the zero line. This was the reason why I expected a very violent drop, that the way it bottoms like this is that it missed the zero line here. The yellow didn't touch the zero line and we exploded higher. It actually could have went into it nicely. It could have just went up into it just calmly and just kind of slowly went into it. But the reason why it did this very violently, because there's a fuck ton of momentum in the market and it's also stabilizing to the downside for future volatility. That's why it did that. Because it doesn't have to do this. And the reason why it did do that, it's not random, it does it for a reason. So it ended up doing this, it's stabilizing for a lot of volatility. UVXY stabilized in a very violent way. Prepare to eat shit in the next couple of years. But also I expect you're going to see probably more green in the next 12 months than red. But it's going to be volatile. We're going to get the flash crash and then we'll go back up and then we get the recession. And it's going to confuse everybody because everybody's trying to time fundamentals with the market movement. Oh my God, the market's absolute crap with fundamentals, and then we're going to rally out. Oh my God, everything looks good again, but then we're going to flash crash. And then we're going to have all the recession signs as we're exploding higher, and everyone's going to say, recession, recession, recession. Shut up, we're exploding higher, shut up. And then that's where you need to sell into, but it'll persist. It's just the way the market moves. Like the market goes up for 3-6 months while bad things are happening. People end up ignoring the bad signs, things like people think we're there already. This is the thing, is that you don't understand technicals or psychology and really know what the fuck you're doing. You're literally just saying, those idiot bears, and they think you can just buy the dip and everything will be great forever and ever. It's like, you're right, but you're off on the timing. And that's what you need to brush up with. So it ends up crashing into the zero line, touches the zero line here this week. That's what caused this spike early on in the week, because it touched the zero line at the start of the week. What did you end up getting? You got the gap down and it went straight up. Not only that, but you got the algo trigger at the start of the week. So it literally triggers it to reverse the correction from December 31st right here, and then it rejects it violently. But it rejects it in a way that's not bearish. And also not bearish. Then we also have the option candles. I mean, there's just so many targets, things, averages. There, crashes into the option candle middle monthly Bollinger for the first time since COVID itself. Okay, 417. There's that. That is a huge trigger. So many things. That's the trend. There's too many to think of. It's bouncing off the 50 RSI. So even reflexively, you should get a bounce off of that. Or it comes back down. Quarterly, I think, whatever. Yearly is whatever. This is the weekly, so you get the spike, then you get the failure, and then you're grinding, you're trying to go higher. But the way waves work, when you activate, you want to push down after you activate. So you activate nice and clean, you consolidate, and then you push down before you go up. It's the function of waves, it's how they move. So that's what we got. It exploded up, it failed. It activates again all last week and then pushes down. That's what that Friday sell-off was. Function of wave dynamics. So it activates here. This also touches the zero line in the daily as well. Happened here. Activates, blow off move. Now you see the MACD starting to trail positively, right? Looks and feels ugly, but it's trailing positively. As long as that holds, you're Gucci, you're good. And it should rally out. Tomorrow's a wash. We don't know. We don't care what it does. All we're looking, it could even drop. You just can't break the low. I mean, it can even break the low. 20.4 is the target on you. And you're just looking for the activation on the Fed. Also, there are times where the Fed can actually sell off on the Fed, close at a low, and then the next day open up green big. And that also coincides with China opening up on Thursday. So that's one of the wave cycles as well. You just be aware. This is just where you want to buy. You want to be buying heavy into July, at least July. Also, FANGs, people saying that FANG is dead. Literally, they're saying FANG is dead. Check this out. Literally, Tom Lee saying FANG stocks are dead. Literally. FANG stocks are acting like death and entering value territory. Mid-cap stocks exhibiting signs of growth over the past decade are acting like death as they begin to enter value territory. Tom Lee says, the forever bull, Tom Lee. So when you see headlines like this, April 25th, that FANG, quote unquote, is dead, okay, that is a contrarian indicator in terms of psychology. When I'm looking at it, that they look very oversold and ready for a bounce. And then you get a headline acting like death. You know what they also, you saw something like this when you saw the end of 2017 and you had Yellen and Trump and someone else standing over a graveyard of a tombstone with the name VIX written into it. And then a few months later, the VIX made the most violent VIX move in stock market history. A few months later, like it's just a contrarian thing. And when you know, you know. And something like this is, I think FANG is going to be extreme value going into the next 12 months. I think they'll sell off with the flash crash, but I also think it's going to be up way higher going into 2023 before the recession. Way higher. So you want to stick with FANG. Tech that is increasing guidance, has good earnings. So else there's Apple retested the broken downtrend, bounced once, bouncing again. This happened on earnings. It had this huge glitch trade up. They said they're not going to do guidance because the shit show that's coming for the next couple of years. So that's going to be something that people would say that's a super negative. It is a super negative, but is it a super negative right now? No, it's not. It will be though. As soon as it broke it, there was an alarm for it. It reversed right off of it, big dick style. That's. I thought that the bottom for Apple would possibly have been the middle monthly Bollinger. It hasn't hit it since COVID. Apparently, you didn't want to get it. That is a massive support zone. Testing this for the first time since COVID. 144, if it can get there. I don't think it does anymore. After Tesla, same thing. Bullish on Tesla. It's bouncing off of the 50 weekly we talked about the other day. An inverse head and shoulders. It sends Tesla up to 1500 going into the rally. Amazon dropped into its 200-day moving average, 200 weekly for the first time since 08. Massive support. Also, it's touching the 50 monthly for the first time since 08. Massive support. Quarterly, it's on the option 50 again for the first time since 08. It missed the quarterly for the first time since 08. Barely, close enough. It would have been nicer if it had touched it. And there's also glitch trade go up to. So we're looking for this to recover pretty quickly and head back through all-time highs by 20. I don't know if it goes through all-time before the flash crash. Possible though. Possible. Broke the 20-year uptrend. Possibly retest it. Even goes to all-time highs, like right on the retest. You get the flash crash, and then heads higher into that. So many stocks oversold. Facebook, we were talking about how we expected it to rally. We got lucky with that one off the earnings. Rallied out, very good. That looks like fun. There's a lot for these to recover from. Like, oh my god, this stock is terrible. It's so down. It's terrible, bro. It's down 73%. Buy it. Literally hit my alarm that I thought it was going to hit in 3 years on the big crash. What? I think this is going to be super volatile. I think Netflix is going to shitstorm for the next couple of years. It hit the 50 quarterly here, so on a mission to get there. Finally got there. 88. Like, I don't think these are going back up to all-time highs. I think eventually it wants to touch the yearly 27 right now. I don't think it gets there now, but on the big crash coming, 2025-ish, 2026-ish, up to here-ish. You can see it like goes up, does whatever, crashes below it, comes back up, crashes at the bottom, something like that. But yeah, all really good buys. AMD, we thought that AMD was going to crash into the 100 weekly, and it went into it and through it and went into the top of last year. Really good. It's got earnings tomorrow. You really want to see a bounce off of this or sell off and go right back up above it type of thing. Yeah, you really want to see it. For all the doomsdayers, they're right. Their timing is just off. And when it happens, they won't be shorting the market. I fucking promise you. I promise you. When the big one happens, anything of real value to the downside happens, they won't be shorting it. If they are, they'll be shorting it with $1. Nothing for them to get real value. And people foaming at the mouth, just like talking weekend after weekend after weekend. All these stocks and tech. LK broke the downtrend, retested it, bounced, exploded off of it, filled the gap today, bounced off. SPXL filled its gap on the daily from last April. Here. Yeah, so we're looking for this rally out. UXY, and this is one of the biggest tells. The biggest tell was this, the XX. The volume disappeared. Now they don't let you not issue shares, apparently, which is really, so this exploded higher and stabilized to the upside, and now it's dropping on volume. Now the stabilization is upside. So it's really interesting how they did that at a moment right when it's consolidating in effect. Another thing that you can look at of the market's going to go is Virtu Financial. This stock explodes higher when the market crashes. What happened with the 2018 blow up in the VIX? Look what it did. And then this was COVID. Think about that. This is COVID. And then this was the 2018 VIX blow up. Yeah, that's when they said the VIX was dead. Now they're saying FANG is dead. Yeah. That type of thing. Virtu double topped here. Trend line. Look for a reversal here. Right? We're looking for a bottom here whenever and however this happens going into months. Because when the market blows up, which I expect it to do, this thing will take another. Gold. I think gold is looking really good. It gapped down on the monthly, weekly, going high. High volume. It's trying to MACD cross. Going to MACD cross, you'd expect a high volume, violent this month. Crashes into the zero line. We'll see how that plays out. The dollar broke a 4-year high on a blow off move. We talked about this a bit. Blow off move. Everyone's freaking out. This is mass panic going into the Fed raising rates. Absolutely losing their minds. The 10-year hit 3% for the first time. This is perfect type of headline type of thing that last year people said we're going to hit 2% for sure. Guess what? We didn't. Now this year, instantly we hit 2%. And guess what? Who was saying we would hit 3%? No one. Right now, what is everybody saying? The market's going to get absolutely annihilated. Everything's going to go to shit. And who's saying anything about yields coming back down to consolidate here? Yeah. And retesting last year's highs. No, and everyone thinks it's going to be really scary. This is floating through the zero line. Now it should be time to consolidate. Going overbought for the first time ever. It broke 100 monthly for years. I want to see this get rejected in some fashion. Yeah, people will buy bonds on the flash crash. Check that. Yeah, so 10%, 3% on the 10-year. Here. absolutely blowing through these things. We had the CPI print here, which I think first the trend. MACD going down. CPI print, I think CPI print in 8 days will help reverse more. 30 just keeps going. Let's see. On the monthly, on the 10 years, we 5-year again into absolute wipeout, and the 2-year absolute wipeout levels. And this is the time where either when you sell the or buy the rumor, everyone is selling the rumor, buy the news off of the Fed. People are pricing in a recession now. People don't understand. You're pricing it in now. It's not happening now. The technicals aren't there. People are scared to death. It doesn't work like that. You literally can't. It's never done that, ever. You need to understand. So what does it do? We need to at least rally out. You need to reset the technicals and reset the psychology. Get it out of here. Get it out of here. How would this reset? Going through all-time highs. Target. That broke the uptrend. I want to see this get hit by right here, 500 to 510, something like this. It could even overextend through it. That's what I want to see get hit. Trend line, test it. It could even be an A, B, C, and this blow off B, overextension, or it could be a wave 5. Whatever it is, I don't care. I expect it to. So it wants to go lower. It can't. Looks like this would. Feels like everyone is buying massive puts. You think everyone talking about buying massive puts every fucking weekend for an entire month and then it just keeps going lower? Do you think that that's normal? Do you think that it's that easy? Yeah. So, I mean, there's probably more stuff I could talk about, but made it clear. So what are we looking for? We're just looking for UVXY to either hit the weekly here. 100 will bounce off the weekly if it can even get there. Today, Tuesday, is a wash. We'll see what happens. And we're looking for the market to rally violently off of this. And all the news feeds and algos that triggered all get triggered with this. So like the SQs, so we forgot about this. The SQs triggered April 25th. And they said that you can make a lot of money if it goes up, but you can also lose a lot of money if it goes down. So be careful. Happens right here. So up, triggered, just like this. See how it goes up, violent drop, so the market goes up, and then you get this rounded residual. It's the same thing. Violent drop, rounded residual, gets fucking wrecked. So you're looking for it, and to confirm it, if you want to be conservative, just wait for the confirmation. Wait for the failure. UVXY going below 14.85. The close of this day is confirmation. So if you want to wait that long, whatever. Or you can get it lower going out into July, or I still think July, August. Important SQs, newsfeed. UV had the same newsfeed on this. Oh, the most important thing out there. Literally, you will see firsthand. Okay, ready for this? Ready for this? It is the dumbest thing ever, but I've seen it for years. Dumbest thing ever, but I've seen it for years. The eclipses trigger the market move. Eclipses actually direct the market. Insane. Why I think that we live in a simulation. It's really freaky, and it will literally cause major tops and bottoms, inflection points in the market. Last eclipse that we had was right there. A lunar eclipse right here, and it triggered the drop. You can see a lot more clearer on Microsoft. The eclipse happened between this night and here. It happened that night. So this day it went up and then got cocked. And it literally bounced right off of the upper bound on Microsoft, and this is everything started rolling over. What did we get this weekend? We got a solar eclipse. It was the first time since that. It should trigger the market. Now, solar eclipses and lunar eclipses happen every 2 weeks opposite each other. So if you see here, this happened here, and then we had a lunar eclipse that happened between this day and this day. This triggered it, right? And it looks like it's falling off a cliff, right? And then you have this huge day, right? And then this weekend, we get the solar eclipse. You see how it instantly reverses? Right? But then why do we drop? And that's just the inflection point. It triggers something. This kind of stops it. Then you have to try to figure out which one is actually working and things like that. Triggered it. I think we're going to go up from here, even set up to go up from here. And then we have one May 16th. So does it do the same thing where this goes up? May 16th happens. We have a really violent drop and all the bears go hurrah. And then we go up through it, right? And then we rally out through all-time highs. Or does the lunar eclipse, where we rally here, and then the lunar eclipse happens, and then we, quote unquote, continue the bear market, and then we'll see how it plays out. I think we're going to rip through it because everything is set up for us to rip through it. I think we'll have the same effect. It'll be triggered. Lunar eclipse triggers it to the downside, but somewhere in the mix, it ends up rallying out gigantic. It's insane. I didn't believe it, but I've seen it for years, over and over and over again, and it literally causes it. Like you wouldn't believe it. Like, check this out. You want to see it? Check out the blood moon. So you see this massive parabolic move. This was the Great American Eclipse, the one that crossed across America. It happened right there at the bottom, literally the bottom day. It was the bottom print of that day. Here. Like literally as it's dropping, the eclipse happens and then it rallies out. Is this? And then we had a quadruple blood moon. I don't know if it was a lunar eclipse, but it was like a blood moon, a red moon, a wolf moon. It was some crazy shit. It happened right here. It happened like this. We had the most violent VIX move in history. Yeah, exactly. It's crazy. It's actually crazy. Crazy. So the next eclipse that happens is the lunar eclipse in May 16th, and then another eclipse in November. I don't know which one, but it's in November, so it's 5 months away. Yeah, and that's that. So all in all, buy things. Don't buy things for long term because we're going to get annihilated. You're not buying things for long term. You're buying things for the cyclicality of things. I think that cyclicals, specifically like the airlines we've been talking about, like all the things return, like services, like the airlines and cruise, Marriott, food places that are going to go out, like people returning to consumerism for services this summer, like summery things. People like Callaway Golf. I love it too. The stock looks absolutely insane with this validation going into the top off the 200 weekly. Like it's just so many things. Like look for stocks like that up here, like, and that's that. Yay, an hour long. Have fun with that one. Fun with that one. Oh, should I do the GameStop one here? I'll make another video for it. But yeah, GameStop, it hit my alarm today on the options. On the options, 250 was the thing here. We're looking for it to fill the gap and also touching the zero line tomorrow into Wednesday. It's literally fill the gap to the fucking penny. Gap at 3.3. Literally 3.3. And all this volume comes right at the gap. That looked like baby. That looked like baby. So I think this activates. I think this actually yeah, about that. But I don't know for sure if this is the bottom, but very viable. About to see what it does off the zero line. It's possible it explodes off of it. No, I'm just gonna do it. So I think that this activated the uptrend here and this consolidated down into the support zone at 90 gap fill. And I think that it's trying to activate. You can see it more clearly on the yearly that if it's spiked up gigantic here and it's decelerating the frame, right? And you're looking for it to activate in uptrend, go higher, as it's decelerating and coming down, it's pushing up. You got the NFT thing with AMC, pushed up here, pushed up. Well, this is a stabilizer then here, pushed up here, and then pushes up here, and it's like a time frame. Like it goes from here, then it goes from here to here, and it's getting smaller. I think it's going to get smaller and smaller and smaller and tighter between the pops and the consolidation. Pops and the consolidation. So getting tighter and tighter. It's going to like a singularity. That's one of the waves cycles. Could this be the bottom? It could be off of the GameStop July 250 falls, off of the zero line. As well as AMC hit my alarm at like 14.8. It's bouncing off the quarterly again. You got that BlackBerry. So it's getting very, very, very close. But also just be aware that it could do that spike, long drawn down, spike, this shorter drawdown, spike, and like possibly like a gap down type of event, like the singularity where it can't go any lower. And it's but I want to see it go like in the middle towards the end of the rally in like June going into July type of thing. Crossing on the weekly, almost 5 weeks. So yeah, too easy. You know, you want to see something very volatile with GameStop, AMC. This is just too easy. This was literally my target. This is literally my target. It's too easy. I would always expect some sort of fuckery move. But you can add to it, like if you want to buy options far out in the money or something like that, don't go too crazy, whatever. Or you could buy the July 250s. Our boss, honestly, not a financial advisor, entertainment purposes only. Kappa. So that's that. Extremely violent down move. ADX goes straight up like a line. There's exhaustion going on. Straight down. There's a massive coil going on. Ooh, baby. All right. That's that. Enjoy the rally we're looking for. UV below 14.85. 14.85. Confirmation. Below the close of 5th. And 20.4 is a possibility. I don't think we see it, but pattern of it, I think that the pattern is relentlessly bullish. I think it's relentlessly bullish. Bottom. So have fun out there. Jeez. I'm sure I missed some for this hour untouched of doom. Anything else? Yield, the dollar, Fed, Sang, Europe market, news feeds, eclipse. Yeah, pretty much everything. Yes. All right. Take care. Peace.